Hey everyone, welcome back to another video. As always, we'll start by looking back to what happened last week before looking ahead to the trading week beginning on July 20th. So last week, SPX closed below the lower end of the expected move. We had roughly a 1.3 standard deviation move to the downside, which honestly at least caught me by surprise. I think it was surprising to a lot of people out there as well, but definitely, my expectation last week, if you remember from the video, was we'd be hitting the upper end again of the expected move, kind of like we have been for most of this month. July so far was looking pretty bullish, and this week, obviously, we saw a pretty major reversal to the downside. So I fully expected the up move that we started about 2 weeks ago to continue and for SPX to make new highs this week. Clearly, that didn't happen. I mean, right away from Monday, this is Monday's candle right here. This red one, yeah, kind of set the tone for the week. We were down for the week. Tuesday, Wednesday, we attempted to rally. We went just about unchanged for the week on Wednesday morning. And then Thursday and Friday obviously saw a pretty big reversal where we went from essentially unchanged from the week to a minus 1.3 standard deviation move to the downside. So, pretty bearish week actually, and pretty ugly looking chart. The rally from 2 weeks ago kind of stalled out middle of this week, and then end of the week we just completely broke down. So not looking good out there. We did kind of hold this 74.20 area for the time being, but honestly, the long wick to the upside on Friday uh, makes me think there's possibly more downside headed our way. Especially given what happened to the Nasdaq. We'll actually take a look at the Nasdaq real quick as well. Just pull up NDX. We can see Nasdaq is actually matching the low from July 9th, where SPX is still maybe a couple hundred points away, but Nasdaq is definitely looking much weaker. And we've seen, Nasdaq kind of matching that low from, uh, early July. So not looking good out there. Obviously, if Nasdaq continues to break down, this is a major support level. This, long candle where it was almost a 1,600 point move, I think, in early June, just in one day. If this level does break, there's really not much down there, maybe for another 1,000 or 1,500 points on Nasdaq. So it could definitely get ugly if we start to break this level. All right, so looking ahead to next week, the week beginning on July 20th, we can see that the midpoint or the starting point, I guess, of the week is 74.57. The upper end of the expected move is 75.88, and the lower end of the expected move comes in at 73.27. So right away, you'll notice that the upper end of the expected move actually aligns nearly perfectly with the highs that we just had this past week and even the week before. So this top right here is actually the Friday from, I guess, 2 weeks ago now. And this candle right here is the Wednesday we just had. So a little bit of a double top on the daily chart there, and the upper end of the expected move is almost perfectly aligned with that level. So basically, the options market is expecting us to not break these levels this week. It would take more than a one standard deviation move to break this level and maybe even get to the highs. So right now, the options market is not seeing that, and I think that kind of shows the downside bias heading into this week. Um, where the options market is thinking that, okay, at most we just get back to where we were on Wednesday. Um, but on the downside, we could continue breaking down and get to these levels, where we were at towards the end of June. So this is kind of where June ended. This is where July kicked off. So the options market is definitely pricing in a possibility that we head back to these lows sometime this week. And at most, we just get back to where we were on Wednesday to the upside. Obviously, as we just saw, we could have a larger than one standard deviation move, and maybe some crazy news comes out, or Google, Tesla, etc. have some earnings this week, and we shoot right back up and maybe even make new all-time highs. That's, of course, anything is possible, but the market is kind of pricing in this to kind of be the range for the week. So far, I guess in the month of July, the market's kind of respected the upper end of the expected move or the lower end. I guess last week was really the first week where we had a major breach larger than one standard deviation. Even these up moves that were happening earlier in the week, we were just hitting the upper end, etc. Last week was really the first week where we kind of saw it break down. But if you remember from the video last week, I kind of also mentioned that the expected move was a lot smaller than we've seen. I think last week was just about 88 points. And we kind of talked about how that felt a little too small, given how much volatility the market has been showing on an intraday basis. And it turns out, yeah, that 88 points was a little too small, and the market completely ignored that and moved, 130 or something points. So coming into this week, now we have a 130 point expected move. So it'll be interesting if the market does push higher. Do we see another, double, triple top kind of um, price action around the 75-80 level? Um, so keep an eye on that if we do pop to the upside. But right now, like I said, just given how Friday closed, we closed maybe not the lows of the session, but definitely way off the highs. And this is a pretty sizable gap down. I think SPX gap down almost 100 points on Friday morning. So I think a lot of people are expecting some downside follow through, especially if the international markets, Korea, Japan, etc., continue selling off. We could continue breaking down, and we had just looked at the Nasdaq, kind of sitting at a very key level. So to put it into perspective, right, the Nasdaq is sitting right here at this level from June 9th. SPX is still about 200 points away from this level. So if Nasdaq does continue to break down, it could drag SPX towards this low. So lots to keep an eye out on this week. Like I said, big tech earnings kicking off as well with Google and Tesla, IBM, Intel, some of the bigger names this week. And then the following week after that, we'll have even more big tech names. So we're kind of heading into the end of the month and the big earning week. So the big boys are starting to report their earnings. So it should be a fun week. All right, so moving on to the VIX real quick. Last week, we spent a little bit of time talking about the VIX in detail. Right, we were talking about how it was sitting at this 15 level. So this was the candle we looked at last week. We kind of talked about how VIX was towards the lower end of this gray box, which is kind of a long-term average. I guess VIX has kind of spent most of its time within this gray box. We talked about how it was below this pre-war level, and it was kind of sitting at, levels that we usually see in the holiday time when it's low volume, low trade, a lot of days off, etc. So it's kind of weird for VIX to be at this level given everything that's going on, not just in the international markets, right? Of course, Korea has been selling off pretty heavily. We've seen some downside action in Japan and Taiwan as well last week, but also from a geopolitical standpoint, right? Where we saw, things kind of get started back up in the Middle East with fighting and bombing, etc. So VIX sitting at 15 just it felt weird. And I guess this week it kind of responded to those things. So VIX obviously had a pretty sizable pop to the upside, towards the end of this week. We saw almost a 20 level on Friday. I think the high here was like 1950 or something. But regardless, we've closed over 18, which is kind of the upper end of this gray box. We've closed outside of it, and it just seems that we might be headed back higher. So I think this 23 level seems far away. I think it would actually take a lot to get there. But again, I think Nasdaq is probably the one that could do it. So if the big tech memory stocks, chip stocks, etc., continue to sell off, that's going to put a lot of downside pressure in SPX, and we could get there. I think things would actually be kind of ugly in SPX if we did see 23. We might be seeing that 72, 7,300 level. But again, just something to keep in mind, something to track. VIX is starting to creep back up. Um, maybe we're due for one of these big, huge green candles on VIX before things kind of settle back down and SPX starts to push higher again. This is just a small little pop. Something just tells me by looking at this chart that it's not done yet. Maybe we'll see this 21 or 22 level, within the next couple of days. So keep an eye on VIX. If it continues to rise, definitely expect further downside in SPX. All right, so once again, we'll take a look at the weekly diagonal trade. Obviously, last week we did something a little bit different where we tried to target the upper end of the expected move on diagonal instead of covering the entire expected move. And obviously, that didn't work, right? SPX closed well below the lower end of the expected move, and it got nowhere near the upper end. So last week's trade was a complete scrap, but maybe part of that is we got a little bit greedy and tried to target specifically the upper end instead of, trying to cover the expected move. But obviously, if we had covered the expected move last week, we would have lost money on this trade regardless, right? Because we had a larger than one standard deviation move. So coming back to the drawing board for this week, I actually think this week this trade is not worth doing, um, largely because of how much VIX has gone up. So generally, this trade is meant to be more of a delta neutral trade where you're not really picking a direction. You're kind of expecting the market to stay within that one standard deviation move. And generally, the trade is supposed to be a Vega play where, as volatility increases throughout the week, you're able to kind of capture that rise in IV and maybe close this trade midweek or towards the end of the week for a little bit of a profit or a max profit if it looks like you're going to end up closing right at your midpoint. So given that we've seen IV already creep up and VIX is sitting at 18, 19 kind of level right now instead of 15 or 16 as it was last week, I don't know if this trade is worth putting on at 375 debit. If you remember last week or even 2 weeks ago, um, this trade was sitting at around $2 debit or 225, something like that. And this week we're almost at, let's say, $4. So it's kind of doubled in price where what that means is you're taking twice as much risk for almost the same amount of rewards. So to me personally, that's not worth it. I'll still track this trade throughout the week, and maybe I'll change my mind. Obviously, Monday morning, if the market opens, there's a crazy gap up or down, or maybe if this price falls back towards like $2. But as of right now, as of recording this, I'm gonna track this trade, but I don't know if it's worth putting on this week just from my risk tolerance standpoint, right? I don't want to pay twice as much as I would have last week just for the same amount of max profit. So I think it's kind of skewed that way. This trade still covers the expected move. So take that with a grain of salt, but not financial advice again, but just track this trade if you want to see how it's been doing week after week after week. Like I said, some weeks where you kind of blow out the expected moves, this trade doesn't end up making money. That's kind of the point of it, where as long as we stay within that one standard deviation bound, you'll make some money. Um, we do have a lot of big earnings and potential news, coming out this week. So we could be pushing the limits or outside of this bound this week. But again, just wanted to throw it out there for those of you who've been tracking this trade or even putting it on with me, every week. Like I said, this week I will most likely be avoiding it. But we'll track it anyways for educational purposes. All right, and that'll just about do it for this week's video. Thanks again for tuning in and watching along. Good luck to you earnings traders out there. Like I said, Google, Tesla, IBM, Intel are the big four this week. So good luck if you're participating in the earnings trades. And yeah, hopefully it's a fun week. Thanks, guys.